Did you know that investor Cathie Wood just issued a strong warning regarding the banking sector based on her knowledge and well-analyzed data? Heeding Wood phrases is worthwhile. Without a doubt, you wouldn't want to miss what she had to say. We think that FAE has been erring on the side of bad policy. We are experiencing a wide range of triggers which ought to cause the FAE to pause. According to Cathie Wood, there should be a complete pivot and reversal in policy if there isn't a halt. They are doing it wrong. We can infer from the markets that they are erroneous. If they continue to rely on the lagging statistic known as the CPI, I believe something important to them will fail. The founder, CEO, and CIO of ARK Investments, a corporation with $60 billion in assets that invests in cutting-edge technologies like self-driving vehicles and genomics, is the American investor and renowned stock picker Cathie Wood. Cathie Wood is frequently referred to as the most undervalued investor in the industry, since she not only makes excellent investing arguments, but also has data to support them. Evaluating claims, monthly updates on a variety of topics, including monetary and economic policies, are provided by Cathie Wood. Innovations: what can be anticipated regarding her area of expertise and her opinions on the Fed's rulings. The Federal Reserve System, also referred to as the FED, is the central bank of the United States and controls its financial and monetary systems. The Fed increased interest rates by 75 basis points to a range of 1.5 to 1.75% in June, which was the largest one-time increase since 1994. Later in July, it is anticipated that rates would rise by another 75 basis points with 1 CME. FedWatch: there are a variety of deflationary signals that, in our opinion, will push the FED to change course and abandon its current course of action. Tool pricing: the probability of that happening at 90.6% would criticize this move as a mistake and claim that the Fed should be concerned about deflationary pressures. Wood observed that among the signs of deflation are changes in gold trading patterns. The U.S. dollar yield increases oil and copper prices and is frequently regarded as an inflationary hedge. In the recent months, gold has dropped below the level of $1,723 per ounce, a decrease of around 12%. This trading pattern contradicts the idea that inflation is occurring. Late in June, Cathie Wood stated that the United States is already experiencing a recession. In a CNBC interview, ARK Investment CEO Cathie Wood acknowledged that she had understated the severity of inflation and then asserted that the U.S. economy is probably now in a recession. Wood attributed the inflationary pressures worsening than she had anticipated to supply chain interruptions and geopolitical concerns like a crisis in Ukraine. She also said, in an interview with CNN's Andrew Ross, that a recession partly fueled by poorly managed inventory had already started. We believe we are in a recession, according to ARK and Wood. The growth in inventory, which I've never seen this significant in my time, is what we believe to be a major issue worldwide. I've been here for 5 to 45 years. The investor, with a focus on innovation, claimed that because of supply chain disruptions and geopolitical threats, inflation has proven to be hotter than anticipated. Wood explained that because to poor inventory management by large merchants, there was an oversupply of some completed goods, such as furniture, which was in great demand during the epidemic. Even the world's best-managed businesses, according to her, are experiencing issues. She continued by saying that the increase in inventories over the past year was the biggest she had ever witnessed in her 45-year career. Inflation is still a short-term issue, according to Wood. Investors will see this when they begin to pay greater attention to the movements of rates, the U.S. currency, and gold. Early in July, Wood stated that gold had been among the most accurate indicators of inflation, and that it had broken down to the bottom end of its range. That will reaffirm to me that the greatest risk in this situation is deflation. Without inflation, Wood said that the recent dollar strength is an even stronger evidence of deflation when discussing gold prices, pointing out that the 10-year Treasury yield is still around 3%, oil is down more than 20% on the month, and the U.S. dollar index is trading at 20-year highs. Because the world economy is in a recession, and despite what is happening in Russia, demand has not risen above 2019 levels. Now that supply has fallen to $96, oil has fallen 22% month over month. She emphasized that another instance of a metal serving as a barometer of actual activity and inflation is copper. Wood stated that if we are correct and inflation unwinds rather drastically over the course of the next 6 months, this should aid growth and show that the inflation concern is overstated. Wood claimed that we were strong in one area, namely the continuation of the current rate of inflation. Wood claimed that the supply chain finds it hard to believe that it has been more than 2 years since Russia invaded Ukraine. Naturally, we could have realized that inflation was a bigger issue, but it has helped us better comprehend deflation. When there is a general fall in economic activity, there is a recession, which is a business cycle contraction. Trade and industrial activity are decreased during this brief economic downturn, which is typically shown by a dip in GDP over the course of 2 consecutive quarters. Recessions typically start when consumer spending falls dramatically across the board. The pace of price growth over a specific time period is known as inflation. A country's rising cost of living or the general increase in prices are two examples of broad measures of inflation. On the other hand, when the inflation rate drops below 0%, there is a decline in the overall level of prices for goods and services, which is known as deflation. Over time, inflation lowers the value of money, whereas abrupt deflation raises it. We know that innovation in the public equity markets, not the private equity markets, has been decimated in the past year, Wood claimed in a recent interview. It has been destroyed for about a year now, and Rawl noted that expectations changed last year when it was believed that the economy would open up, interest rates would rise, and inflation would increase. Issues with the supply chain persisted despite the adjustment. Having said that, the concern over what inflation and interest rates will do initially engulfed the innovation sector, and it now appears to be affecting the market somewhat more generally. We've seen inventories build up across the ecosystem, so Wood believes that the worries will change from a recession to rising interest rates and possibly increased inflation. You've heard me talk about this previously. Stocks in the public equity markets are down to 50% from 75% last year, according to Wood Innovation, and other investors are concerned that the United States may have a recession in 2019. The founder of ARK Investment Management, Cathie Wood, believes that one has already occurred and that it may be over by next year. We truly believe that we will emerge from this inner recession in 2023, despite the fact that many economists and strategists have been opposing the idea that we are in one and predict that the U.S. may enter one next year. Jeremy Siegel, a professor at the Wharton School of Business, concurs that the United States is currently experiencing a recession. According to Siegel, the economy probably shrank in the first half of the year, according to CNBC. In fact, I believe we are experiencing a minor recession. A third-quarter economic downturn is predicted by the signs he is tracking, he noted. He specifically noted that data on the money supply in the United States has decreased, indicating that inflation is under control. Wood said that there are many signs that prices are beginning to decline, and that she believes that everyone's concern over inflation is an incorrect way to view the world at the moment. She highlighted their conviction that the greater danger is deflation. She continued by noting that they have been saying this for some time and that they have endured scorn for doing so, as well as challenges from those who are certain that the United States is experiencing inflation similar to that of the 1970s. Despite worries, the majority of people think that a recession does not appear to harm Tesla significantly, whereas automobile players normally see their sales decline during economic downturns. It is anticipated that Tesla's business will do significantly better. EV adoption is still in its very early stages, and for Tesla, demand has typically outpaced supply. Tesla has provided guidance for over 50% delivery increase over a number of years, and this year it may even reach 60% growth, which suggests that demand growth should continue even in the event of a slump. Be sure to follow this channel to be informed on cautionary tales from experts like investor Cathie Wood.